Over here, let's say, okay, we're gonna say that we did work, our landscaping work, and we expect them to pay us with something other than revenue. It's kind of like, you ever see that Daredevil movie where the guy, he's a lawyer and he keeps on doing work and people pay him with fish and stuff or something like that because they don't have any money or something. I don't know. But we'll say this is going to be customer number one. Customer number one. And we're going to say, okay. And so we're just going to set up the invoice the same way we normally would. Let's just pretend it's a service item. So service item, I'm going to say service item 1, which I misspelled. Let's add it. And I'm just going to make it a service item. Now, obviously, again, if we did have to deal with sales tax, we can record it at this time. But I'm just going to say there's no sales tax to make it easier on us for now. We could say non-taxable. Boom. Done. And then, okay. And so that's set up. We'll just say that we bought one of those for I didn't put the price. Let's say it's $100. Okay, so there it is. So we're going to say, okay, we did services for you. I'm going to record it just like a normal revenue. And then at some future point in time, you're going to give me supplies or whatever it is that you do, meals or whatever it is that you do. So maybe they give us business meals so I can still record it as a business expense as opposed to personal. So I'm going to say, all right, let's say that's going to be save and close. So we track that just like we normally would. If I go to my balance sheet, we're going to say the accounts receivable, I'm running it to refreshing it. And the AR has gone up. So if I go into the AR, we have an increase of the $100. If I go back, there it is. If we go to the income statement and run it to refresh it, we've got revenue has been recorded. And if I go to my first tab, I can still go into my sales tab and track the information, say in invoices, and I see that in my outstanding, or what is it, not due yet, invoices, there it is. Now there's nothing indicating here that I'm going to get paid in something other than cash, but I can know that by the customer, right? I might say, oh, that's the customer that's going to pay me with obviously food or something like that, okay? And then when they pay us, or possibly they might have given us the food first. Maybe they're the ones that said, I'm going to give you a free meal if you do landscaping for me later, or I will provide meals to your as a business meals to your business board meeting or whatever, right? So we're going to say, okay, what if they did that first? Well, then I would enter the bill on their side so I can track the fact that I owe them landscaping services. So we're going to say this is going to be vendor 1. Now notice I'm going to have the same person now, or the same company, as both a vendor and a customer. I already set them up as a vendor. We're going to call them name number 1. I already set them up as a customer, but I can't use the customer as a vendor. So I'm going to have the same person as someone that I buy stuff from and someone who's a customer that I sell stuff to, right? So this one is the vendor. I'm just going to say, okay, that's vendor 1. And we're going to barter here. And let's say this went into meals. Let's say travel meals or meals and entertainment, we'll say. Now, again, if it was personal meals, then I couldn't really, what would I do instead? I wouldn't put it into meals. I'd simply put it into draws. It's money that I came out. It would be an equity account. It wouldn't hit the income statement. But if it's a business expense, we'll put it into meals. Let's say, imagine it's $100, so it nets out. And so we'll say, okay, what's this going to do? It's going to increase accounts payable. The other side's going to go into meals expense. Let's save it and close it. And then I can go into my balance sheet and run it. So now we have the accounts payable going up. If I go into the accounts payable, there it is, the 100. And if I go back and I go into my income statement and run it, we have the 100 down here. So the 100 nets out revenue of 100, and then the meals of 100 nets out to that $34 that was in there for some odd reason. Let's go to the first tab. So now if both those things happened, I can just match them out. I can say, okay, well, on the sales side of things, if I go into this customer over here, I could say on this customer, boom, we have $100. This is my barter partner friend of $100. And on the expenses center, on the vendor side of things, I have the same person that is a vendor. Let's put outstanding, overdue, where is it? Overdue, open bills. We have vendor, there it is, vendor, which also is at 100. So now we have an equal and opposite amount of the receivable and payable because we both have done the work of equal value. And so I can imagine that we got paid, right? We've got paid for the work. So now, so I can enter a receive payment form and a check or expense, a bill payment form. But I don't want to put that, when I use those forms, I usually have to put them into the checking account. I don't really want to do that. I want to set up another account, and it's going to have to be typically a bank type of account, because those are the accounts that are going to show up when I use the pay bill form and when I use the receive payment form. In other words, I'd like to basically set it up maybe as like an other current asset type of account or as a other current liability account, but those accounts might not be usable functionally as an account that I want to use with the form that I'm going to need to pay off the bill, bill payment form, or to record the received payment. So I have to record it, the clearing account, as in essence a banking type of account generally. And so I'm going to go to the first, that'll be the easiest thing to do at least. So where are those located? If I go into the transactions and I go into my chart of accounts, here's my chart of accounts. I basically want to make another bank type of account, but I want to make it a clearing account. So I can set up a new account. So I'm going to say new account, and I want to say the account name is going to be clearing. This is going to be a cash clearing trade or barter account. Trade, I can't spell trade. And then the account type is going to be a bank type of account. And cash on hand, I'll say it's other, let's just say cash on hand. Okay. Make this a sub account. No, I'll just keep it there. There's not any open balance in it. Description, so I think that's pretty good. Let's save it. And so there is our clearing account. So now let's go back into my sales area, and I can go into my customer number 1, and we're going to say that we received payment. So we're going to say received payment from them, and we're going to say let's say this happened, and we'll keep the date the same. Payment, I might say this is, let's add a new payment type. This is trade or barter. I'd say barter, but I'll probably misspell it and people will laugh at me. So I won't do that. And then I'm not going to put it into undeposited funds this time. I'm going to put this directly into the cash clearing account. It's going to go into the cash clearing account. And then there's the invoice. We're going to say the 100 was paid off. So what's this going to do? It's going to decrease the accounts receivable, decrease the subledger for customer 1, and then it's going to put it into that clearing account, which I set up as a cash account. So let's go save and close. And then I can go to my balance sheet and run it to refresh it. And so now we can see that we have $100 in the cash clearing account. That should net out to 0 in the accounts receivable. I then have the payment that has been received. Let's go back. If I go to the first tab and I look at the detail for this customer, I can track it just like I normally would. Even though they're not paying us cash, we could still track whether or not we're having an even deal happening with our barter situation. So that, again, I think that's really useful to do, important to do, so that you know kind of where you stand, and you don't just have things floating in your head as you're basically doing business with people, and you're not tracking, who feels like they're doing more business or not, right? Who's making more in the situation. Anyways, if I go into the expense side of things, we're going to say, okay, now let's go into the vendor tab, and we could do the same thing. So there's our vendor. We're going to say that we have transactions. Let's just say, let's hit the plus button up top. Hit the plus button and say on the vendor side, we're going to say we're paying the bill. Pay the bill for that vendor. And the account is going to be the cash clearing account again. So what's this going to do? It's going to make a pay bill form, a type of check form, but instead of decreasing the checking account, it's going to be decreasing the vendor account. And I'm just going to put on the check number, this is a trade account. And so that's going to be that. Let's say save and close. And then if I go to my balance sheet and run it to refresh it, we can see in the clearing account, it has gone back down to 0. That's what should happen in the clearing account. So we had it, the payment and the payment and the bill payment netting out, going back into the accounts payable account. It's back down, so it went up and it went back down to where it was. So just like we normally would have it. And if I go to the first tab, we see that we have then, let's refresh the screen here. And we have the bill form and the payment form. So they net out against each other like we would expect them to happen. And on the balance sheet now, because these two amounts aren't in the checking account, they're not going to mess up our bank reconciliation. See, I could have done the same thing and put those two into the checking account. But if I did that, then I'd have these two transactions that would come through to the bank reconciliation, and I'd have to check them off, which isn't a big problem because I could just check them off, but it's still kind of a pain to do because I'll have to remember that those two, I'm going to have to check those two off. All right, let's go